All right, welcome into Market Day Report. I am Scott Shelley, otherwise known as the Cow Guy. Happy Groundhog Day, right? And you know what? The groundhog's only been right about 37% of the time. I bet our weather guy, Tim Ross, could have probably told us that. Right, Tim? All right. Good news is you got me all day today. Bad news is you got me all day today. How about that? That's to whatever side of that aisle you sit on. Let's take a look and see what the markets did overnight. Let's start with corn. What did that have in store for us? Well, if that's not my life story, corn was unchanged overnight. There you go, 447 and a quarter. Didn't really do anything. New crop off 0.75 cents to 478 and a quarter. So that's corn overnight. Soybeans, what do we have happening there? They were down 1.25 cents overnight. A lot of this stuff was green actually when I sat down for the radio show earlier this morning. We've got that $12 line. Maybe could be getting attacked here in that March beans when we open up. We'll see. But 12.02 was the last, and we go out to the new crop, which I'll bring up in a second. Well, let's go down and bring it up right now while we're on it. Let's see. New crop is, there we go. It's a big chart. It's hard to pull it up. 11.84 and 3/4 down 0.75 cents. There you go. Let's go to the wheat in Chicago. Chicago wheat. What's that got in store? Well, overnight we're up 5 cents in March. 606 and a half last there. Right in the middle of the range. We had about an 11-cent range. So there you go. 4.5 cents higher in the May to 614. That's what we did there. From Chicago wheat, we go to Kansas City to see what the hard red did. That was up 8.75 cents. So wheat liked it. 629 and a half was last in the March. That's where we closed. If you go out to say, I don't know, July, 620 and a quarter is last there. That's up 6 cents. If we take a look at the spring wheat in Minneapolis, 7 cents better in the front. 703 is last, and that's only 3.75 cents off the highs. And we got July up 5.5 cents there too. So moving right along to the cotton. What has the cotton got in store for us? Look at that, a whopping 1 point gain. 86.50 is last, and that's only 20 points off the high. That's a great segue into our next guest analyst, Brian Hoops. Brian, thanks for being on the show. He's with Midwest Market Solutions, and he's the president, right? All right. What do you got for us? What are your thoughts here?
Well, good morning, Scott. So similar to yesterday morning when I talked to you, we had the dollar screaming higher and gold and silver just being collapsed upon. And that's exactly what's happening again this morning. These non-farm payroll numbers well above expectations. Unemployment rate stayed steady at 3.7%. It really tells you there's very, very little chance we're going to see any type of a rate cut in March and maybe not into 2024 anytime soon. And I think that's what the market's anticipating here, what it's telling us. Corn and beans were trading higher, as you mentioned. When those numbers came out, they softened quite a bit into the closing bell, and probably going to stay under some pressure. Now, there was some firms trying to talk up a big drop in Argentina corn condition ratings overnight as being very bullish. But if you step back and look at those numbers, the Buenos Aires Grain Exchange reported this morning that 89% of that corn crop in Argentina is good to excellent. It is down from last week, but the average, the 5-year average, is 84. Last year it was rated 68% good to excellent. Right now, that crop is looking to be a monster crop, a really good, highly rated crop. And maybe some dryness will hurt yields eventually, but the market doesn't seem to really care about it that much this morning. I think we're more focused on what this dollar is going to do, how that's going to affect our longer-term exports, because right now it doesn't look like there's enough weather concerns to give us a rally, and demand just isn't strong enough to sustain rallies.
Yeah, you're right. I feel, and we're going to watch that U.S. dollar all day today, because you're right. There was a blowout number for the jobs. It is on fire, but it's also because we've seen that 10-year yield rise from 4.86 overnight, 3.86 overnight to it just went over 4%. So bonds are selling off hard. The dollar's rallying hard. I would say that those are not friendly to the grain markets, and you're right. That's exactly what I saw happening during the radio show earlier today. That when that number came out, we started to see some of those things that were mildly green here to get started to turn red right away, right in front of our faces. All right, let's go away. We're going to pay some bills. I'm going to get settled in some more here, and we're going to come back and talk more with Brian Hoops. He's in Springfield, Missouri. We'll be right back after this. All right, welcome back. This is the time we talk about the livestock. And when you wear a cow jacket, you kind of have to do that, right? Or it'd be rude not to. Let's take a look at what we did overnight, right? Before I stumble on my own words. This was a good market. We saw that report. It finally caught hold. We ended up being up $2.40 in that Feb to 179.75, not too far off the high of the day there. only by about, what, 22 cents. April was up 247 right behind it to 183.17. So that was a good board. But, if I had to give you a recap on that, it didn't start off that way. Even though we had all the data that we wanted, it just took a little while before that ball got to re-rolling. Let's take a look and see what feeders did. They did also go a little higher. We actually came off the highs here. 472 is where we shut this down last night. 472 higher in the March. We had a closing price of 244.87, but almost, I don't know, we had another 80 cents tacked on that earlier, so 245.60 was the high there. We'll see what we can do here today. But even out the deferred, SEP was up $3.80 to 272.85, so not bad. Let's take a look and see what the lean hogs had in store for us. They were lower. They were dancing to their own tune yesterday. 55 cents lower in the front fab, 75.80s last. But look at the April's probably where the volume is right now. 107 lower there. 83.75. So that's a good segue to bring back in Brian Oops. Brian, thanks for sticking around. It was like a slow roll yesterday when we finally got the mojo going in the cattle market.
Yeah, a lot of momentum being built after that opening yesterday. It was, as we talked yesterday, not a surprising report, but a very friendly report longer term. And the futures market really reacted and just kind of built momentum all the way into the close. Now, there was some cash trade that went along with those futures markets at sharply higher money, much above expectations that were early in the week. It was $3 to $5 better on a dress basis and trade volumes in the South. So we're looking 178, 179 being traded in the Southern Plains. The futures market kind of had to catch up to that cash trade. And so we saw February in that 179.50 range as the close yesterday. So now where do we go from here? Well, February options expire today, could give us a little bit of positioning, some choppy action. You have first notice day against February futures after the close on Monday. It doesn't look like there'll be any deliveries at this point in time, but you never know how how the board's going to react. But again, we put in a lot of this premium in the cash markets. If you have to look ahead to next week, the feedlots are probably going to be asking 181 to 182 in the Southern Plains, looking for higher money yet. But the packer margins are back in the red as the cutout values have not kept up with the stronger cash trade.
All right, so, I mean, I've listened to a lot of calls. There's a decent amount of research out there. Is it safe to get long, really long here, or are you still kind of leery of what could come around the corner? Because I've got some good research that says you might want to be putting on some collars here, selling calls, buying puts, kind of cap your bottom, or, put a floor underneath your bottom. What do you think?
I think that's a great risk management strategy because as we go back 6 months in time, people that had done that type of strategy were very handsomely rewarded when the market really fell out of bed. The timing is going to be kind of critical on that. Are we making a high right in here? Maybe it comes a little bit later this spring into the early summer months. But at some point in time, I think that's a great strategy where you buy those puts, sell those calls. It's a collar, window, a fence, whatever you want to call it. It's all the same thing, but it's risk management.
Right. Great stuff. Love to hear what you have to say there. Have a great weekend. Thank you very much
You too.
for your content. Always good stuff. That's Brian Hoops coming to us from Springfield, Missouri.